All right, good morning, everyone. It is 9:43 on the morning of August 2nd, 2022, and this is my pre-market strategy session. Actually, this is a post-bell strategy session. And so what I'm looking at today and what I want to point out is that the VIX has made a bit of a significant move here in the past couple of days, and I'm going to go back and correlate that a bit. So here on, let's see, it was at the 29th of July, so last Friday, it was as low as 21.3.
Hello.
And now it made, my son wants to say hello. Go ahead and say hello again, Adam.
Hello. So we've started a new channel.
Okay, so my son and I have started a channel called the Adam Schmadam channel. I'll do a plug of that at the end of the show here. All right. So here we've got a move here from, let's right there to right there. So a 15% move higher in the VIX between the 29th of July and the 2nd this morning, 2nd of August. And just to kind of put some perspective on that, here's this day back here on the 9th of June. And it made, on the 9th of June, the VIX made about an 8% move, right? So let's go back and look at the 9th of June and what happened on the SPY on the 9th of June. So June 2nd, June 8th, here we are right here. June 9th, right here, big red day on June 9th, right? And then the subsequent moves up on the VIX also corresponded with more large moves down. And you can go back and you can correlate the moves up on the VIX with these big red moves down in the broader market. And it all matches up. On like, say, 21st of April. Let's look at the 21st of April on the VIX. Here's the 21st of April. Right here, this big green up bar. And this move isn't even 15%. Let's go from here to here. It's 12%. You know, and in April, the move down was, let's find it, April, May, 21 April, right here. Here, right here. This is a daily basis. That's a 2.87% move down on one day, right? Well, so what I'm getting at here is that with the VIX, its recent movement here in the past, since Friday, it popped up 15%. And the correlating move, there was no correlating drop in the past 3 days. You can see here when the VIX made that run up, there's just been consolidation up here. Now, do I think what's happening right now, I think it's kind of obvious, is that there is this recent resistance area back here from a couple months ago, from the end of May into the beginning of June here. And so this price area is resistance, you know. And does it make it past it? I don't know. It might not. To me, though, right now, it's looking like it probably will eventually at some point over the next, say, I don't know, 3 to 6 weeks. And the reason I say that is because of the VIX having this run right here. VIX having this little run right here, and there's no corresponding activity, no dramatic. And this ought to cue, this right here ought to sort of signal a more significant downturn in the broader markets, in the SPY certainly. And it didn't. All it did was signal, all it is corresponding to is this consolidation period right here. So if the VIX is going to run up and the SPY is going to sit tight, that's bullish. So the next downturn in the VIX, the next time the VIX starts to settle down again, there's going to be more upside in the broader markets, in the SPY and so forth. So yeah, and it's even happening right now. Actually, it looks like the VIX is popped up, and now it's going to start to settle down again. And that's just kind of what the VIX always does. The VIX pops up, then settles down, pops up, settles down. Now, there are higher lows here. You can see in the VIX, and there's this little line, this little support line down here. You're not supposed to chart the VIX, but I went ahead and did so anyway. Now, if the VIX starts blasting up back up to the top of near 30 or above 30, like it's been doing here recently, then yeah, it's I'd be very surprised to find that the market doesn't react to that. But right now, this is really interesting. I mean, the VIX has come down and it hit right off of that support level, bounced up. This trend line right here on the VIX, it's doing its magic. My guess is that it'll come down and break back below this trend line, though, here pretty soon, because the broader markets really have not responded to the VIX at all. So it might be time to be a little bit bullish. This is a counter trend move in a bear market. This is a bear market, and and actually let's see something here real quick. Let's take this. Let's do this line right here and see where we are. Yeah, I mean, there's room for the SPY to run. So, and also we've got. Here's the 10-year and the 2-year, and the 10-year and the 2-year spread is negative. And now that is indicative of a recession and rough times ahead, right? But the stock market doesn't do anything. The stock market usually doesn't start to really tank and go down until after the spread starts to normalize again. So here I have the 29th of May of 2007 marked off. Oh, you know what? Let's go ahead and do 19 August 2019. I mean, so this is a bit different. The COVID sickness is a little bit different of behavior, market behavior. We can go back and look at that one too. But of the big ones here that were of sort of like business cycle type instead of pandemic influence, back here July of 2002. July of 1990, January of 2001, and May of 2007. In all these times, as the yield curve is inverting in this area, or down here, for example, in this area where it's inverted, and down here where it's inverted, the stock market continues to go up, and it's not until the yield curve starts to normalize that the stock market starts to go down. So this is a deep dive on the 10-year, 2-year spread. So right now it pays 334 points more to invest your money for 2 years than it does for 10 years. So yeah, this is a deep dive. This is going down pretty fast, pretty far. We're some tough times are forecasted. Some tough economic times are definitely in the forecast. So we'll see what happens, but it won't be until this yield curve starts to normalize again and break back above zero and move higher that the broader markets will really start to react. So in the meantime, things are looking pretty good. So what we've got going on here right now is you can see these zigzag patterns right here. And what's really neat about the last zigzag pattern is that it came down to its high right here. This last up part right here, the market went up, broke through that price, came back, tested that area and then took off again. So I imagine if we can get back to, if the market goes back to this 307-ish area, that you'll find buyers right around somewhere, in the neighborhood of 307, maybe a dollar below or even a dollar ahead. If it even gets close to 307 down to like say 308 or 307.50, then buyers will step in and push this thing back up. And so right now, major resistance is at 314.56. You can see here we've kind of flirted with it a little bit. I think it's just a matter of time and a short amount of time that the market gathers some more momentum for the upside and shoots through this 314.56 area, and then just kind of leaves these lows behind for a while. This bear markets are really tricky, and and actually, no, let's see where we are as far as bear market territory is concerned here. So here we are at it's the all-time high, really. And there we are, negative 34% as of the 16th of June. See where we are today, like as of right now. At this very moment, still down 23% from its high on the Qs. So the Qs are still in a bear market. And we have hit the technical recession with the 2 negative GDP quarters in a row. It could be, the market likes to look 6 months ahead. We're supposed to be in this economic situation until at least the first quarter of 2023, according to Hedgeye. And so this could be just a bear market rally, or it could be the market looking at the other side of Q1 2023. Hard to know, really. 6 months out from now would put us in February. I don't know, but in any case, I don't want to be stuck on the wrong side of this move, and it's a big move. All right, everybody. Good luck out there. Keep your wrists tight. Click like, share, subscribe, leave a comment, tap the bell, and I will see you at tomorrow morning's strategy session. I am out.
I'll make a video about